Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 11th of December, 2020. We had a little bit of consolidation this week. You could call it a pullback. The semiconductors lost 3%, were the hardest hit. But generally, I think it was a healthy consolidation. Looking at the S&P 500, as measured by the SPY, you can see that we came right down to the rising 20-day moving average. And this level, of course, was also a prior little band of resistance here. So the way I look at it, we're still a little bit cautious because we're below that declining 5-day moving average, and we're also below the month-to-date volume-weighted average price. Hopefully you'd seen the video on Wednesday where I had pointed out that I thought maybe we would run up, and then if we find supply, then we want to become more cautious, and that's exactly where we are. So until we can get back above a flat to rising 5-day moving average in the S&P 500, then the S&P 500 is still considered undergoing a little bit of profit taking. And if it doesn't hold today's lows, then I think the next potential level that it could come down to is about 361, which is the volume weighted average price off of that prior peak. Below that, then we have about 355, which is the volume weighted average price from the low in November. I don't think we're likely to do that, but again, we just want to express a little bit of caution while we are below the declining 5-day moving average. That has saved me more money in my career than any other tool out there, period. The NASDAQ also undergoing just a little bit of profit taking, came right down to this prior band of resistance in the rising 20-day moving average. Today it traded what's known as an inside day, meaning that today's low was higher than yesterday's low and today's high was lower than yesterday's high. I don't know if I said that right about the lows, but today's anyways, it was totally encompassed by the prior day's range. So we traded within that, an inside day. That typically is something that people look for as a potential turning point. So that might be the case here for this market. We also see that just below, I drew that incorrectly, that we have the about 296 if we do fail. That's the volume weighted average price from this low, and then we would add maybe another one that would bring us down to 293. So for now, going into next week, again, we're expressing just a little bit of caution as we see lower highs and lower lows below a declining 5-day moving average. The Russell 2000 was higher this week, so it kind of bucked the overall trend here. You can see it gained 1.13%. And here's our daily chart, just a beautiful uptrend, stair-stepping higher, higher highs and higher lows in these little box formations. And basically, you have to continue to give the benefit of the doubt to the buyers. We are holding the rising 5-day moving average in the Russell 2000, and back to that daily time frame, you can see that we had a tight consolidation here today. So again, the benefit of the doubt goes to the buyers. If we do see the market sell off, the Russell that is, a little bit next week, I would expect that about the 187 area is where the buyers are likely to first kind of defend the market, because that is the month to date volume weighted average price and this important level that we've bounced from a couple of times already. Semiconductors, this market, I was thinking maybe we could rally up to the volume weighted average price from this prior peak, but instead we saw the month to date volume weighted average price act as a place where supply was released on Thursday, and today we came down to the volume weighted average price from this low here, which I had identified previously. So semiconductors, as we know, they've been just monster performers here. Let's take a look. Year to date, up 50%. So a little bit of profit taking is certainly not a bad thing. It continues to be a healthy uptrend, and we'll see if this is the pullback or if this is something that continues to fail. Something I mentioned Wednesday that I guess got a little bit of misunderstanding is, I called the approach of just buying pullbacks idiotic. And by that I mean buying it without a strategy. You don't want to just blindly buy into a pullback and say, hey, it's down, it's at this volume weighted average price, it's at a retracement or whatever. You want to wait for actual evidence. And for me, that evidence typically comes when we start to see a first higher high above a flat to rising 5-day moving average. And it doesn't mean you're going to catch the low, but stop obsessing with catching the low, because only liars tend to catch those lows, or once in a while you do get lucky. Wait for the evidence to appear before you put your hard-earned money at risk. Why give up an edge in timing if you don't have to? The Biotechs, as we know, broke to new all-time highs just last week. This week on Wednesday, we saw they pulled back down to that breakout point, and it attracted buyers. So prior resistance, let's just go back to that again. Prior resistance tends to act as support, and that's exactly what we saw here this week in the biotech. So they are a healthy group. This week's low is going to be an important level, and you can see to measure risk against going forward. So 146 and a quarter-ish, and you can see when I just drew that volume weighted average price onto that low, that level is starting to be defended as well. So we have a very healthy uptrend in these biotechs. If you're long, worst case stop, I would say, goes underneath this week's low, because if it were to break back below that, it would potentially invalidate this entire breakout. So just be aware of that. If you follow my Twitter, some of the stocks that I had mentioned this week included, let's take a look, HDSN. This one was one I was looking to potentially buy on strength above this level. The stock never triggered above that level. So what I was looking for was something like this, and then a stop under here. Instead, we saw failure. So as it breaks down and invalidates the definition of trend, I remove it from my watch list because there's no reason to be involved in it. A great one, though, was RVP. If you follow me on Twitter, I had mentioned it pretty much right there, just as it was starting to break higher from $10.50, rallied up to $12.75-ish, and we saw some pullback in there today. I did suggest a stop underneath here. This is one I'll be looking at again next week as a potential long side continuation, maybe back above today's intraday high here, that is late afternoon high, because that's where we see the volume weighted average price for the 1 and 2 day the 1 and 2 day volume weighted average price, that is, together there. So if they can get back above that with a stop under here, or it may be even tighter underneath this level, is a potential way to trade that next week. Shares of Apple pulled back nicely, and you can see they came right to the volume weighted average price from this prior low. We have in here all of these volume weighted average price levels from the prior peaks and valleys, so it would stand to reason that this is going to be most likely a strong level of support. If it was to break below that, it would be reason for concern. But I think going into next week, you want to keep an eye on Apple, as far as we came down to the volume weighted average price from the most recent sell-off low, swing low, that is, and we could draw a volume weighted average price off that. You can see it didn't come into play, but from this low, you can see that twice we came into that and the buyers stepped up. Now, does that mean we just blindly buy there? Not for me. I would rather it see back above the volume weighted average price from the peak that it made this week, and most likely, in order for the momentum to come back into Apple next week, that we want to see it above that level right there at about 123.5. And the way that I like to see it happen wouldn't be like this, because if we were to do that, I'd have to have a stop way down here. Instead, I'd rather see that it does something more along the lines of this. There's that high. We would maybe see rally up towards that level, and maybe even slightly through it, calm down for maybe a day, day and a half, build a higher low, and then start to move higher, and then to purchase it above here. If we were to do that, to purchase it right here, for instance, then we could have a stop, underneath whatever a higher low might end up being. I'm not saying that will be, the scenario, but that's a potential scenario to me that would make it bullish for shares of Apple. CYH is one I've got an eye on next week. I don't love the stock, but I like it. It's pinching between the volume weighted average price from this November low and this peak right here. So you can see what's happening in this pinch is that we have supply coming down on the stock, being met with demand from underneath, and in between there we're seeing that this volatility contraction. Well, from contraction often comes expansion, and I think maybe next week back above probably $8.68 or so might be a trigger for the stock. Worst case stop for me as a swing trader would be under here, maybe even underneath, well, I guess today's low, but it's still in development. I'm not ready to buy it yet right out of the gate. One I missed this week that I put on Twitter was this SDGR, and if you watched Wednesday, I think I spoke about this. The volume weighted average price from this low was coming up underneath it, holding as support, as well as the volume weighted average price from this peak, which had been prior resistance, turning into support. It came out of this range here today. Unfortunately, I was asleep at the wheels here first thing this morning. It gapped lower just a little bit. It was met with immediate buyers and then off to the races. That's one that I'll be monitoring next week for potential pullback entries, but we'll see how that goes. I want to update quickly on crypto as well. Let's start with the big daddy of them, which is Bitcoin. And Bitcoin, I think that it's likely to find buyers once again now down near this 17.4-ish level. You can see here I've got these volume weighted average price levels. The last one that I had drawn in here was hit and bounced nicely. Now I think that we're going to see, this is likely to not provide such a strong bounce again, but I do think that that's a level that if you're looking to add exposure is likely to be, found to find buyers, that is, and a stop would probably go underneath here if you were looking for that. Litecoin is kind of right on the money here. In fact, I just purchased some of this today, some of what I had previously sold. It came right down to the volume weighted average price from the September low. We saw a strong bounce from there last time, and that provided a great trading opportunity. If you recall, I was getting a little bit cautious and sold out of some up here, repurchased in here. I did sell some back at about 83, and now I'm replacing that. So I tend to trade these a little bit. But not with much size, which is why I trade them, a little bit differently. But if you look at the longer term chart of Litecoin, you can see here that this is a prior, area of resistance, now potentially becoming support again. I would be concerned, I guess, if it were to break back below probably 62, 63, and then Ethereum is pretty much right on an important volume weighted average price level as well. I haven't repurchased any of this yet. I'm considering it in this general area though, because that volume weighted average price has been really good. I guess that will do it for me. Thanks for tuning in and have a good weekend.